Okay, welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel options trade system for free. And the system is currently up 18% year to date. Please type in the chat that you are able to hear me. I'm assuming that you can hear me, and I'm going to move forward. Uh, be sure to post any questions that you might have. You want to post them early, and that way I can answer them before I end the broadcast. And so first, yeah, you can hear me. Good. Thanks, Charles. So we'll start with the earnings edge. What happened last week with the earnings edge? You can see my screen here. These are all the trades that I've made with the earnings edge. So far, you can see where we're not over that $5,000 mark where we started. But last week, there were no stocks that were coming into earnings that met all 8 filters. So there was no trade. So overall, my record is 20 wins, 6 losses, and 3 ties with the system. Let's take a look at something here. I mean, you can see the P&L is almost up $1,000, but I'm actually down like 250 bucks. And that's because there's a lot of commissions with this system. So be aware, there's commissions. But overall, actually, I would be making money if I didn't have to pay those. And overall year to date, you can see my P&L. I'm down 5% year to date. And this is what I would use if I were looking to, had a small account and I was okay with a lot of volatility and I wanted to try to, double that account, some crazy numbers. This is the way I would trade it. Okay. So that's really earnings edge. Nothing really happened last week. Let's talk about the second program that I run, which is the premium level 5, which we trade the ES, and we can see here our P&L. We started with $30,000. And one of the things I like about the premium level 5 is we only have one position on. And so we're basically almost going into cash. Like this one position that I'm in, it's not, there's no way it's going to take me down into negative territory. So what I like about the system is it brings you back into cash and you're kind of starting over. When you're not fully allocated, when you're partially allocated, there's not a lot of risk. I mean, we've cashed out on the winners and now we're just sitting with not a lot of risk with one position open. Now, my record is 7 with the Premier level 5, 7 wins, 2 losses, and 2 ties, and I have 1 trade open right now. And my largest drawdown is about 3 to 4%. And right now, I'm up around 4%. So it's doing quite well, doing what I expected it to do. Now, the market during the time frame when I started trading this, which was April 8th, the market's been down 19% compared to 4%, and it's down about 12.5, maybe 13% right now, compared to this system being up about 4%. Okay, so let's get into the third item, which is the safe wheel. And I want you to know that I also have the safe wheel guidelines and flowchart available. There's a link in the description if you want to get exactly how to trade this, because not every scenario occurs while I'm trading it. And if you want to see every possible scenario and trade this on your own, you want to get that flowchart, and also you want to get the rules, the filters as to how to pick a stock to use for this system. Okay, so let's talk about the safe wheel. Let's get into that account. We're trading FCX. Okay. And you can see that we own 100 shares, or that I own 100 shares, and my trade price was $31. So what happened? Well, I sold the $31 put, and FCX was above $31 at the time. Now it's trading at $28. So you can see here, down about $35 on the trade, really not too significant. But what happens now? So we're playing the wheel. We have our put hedge, of course. You can see our put hedge is up $263, so that's really helped us in this scenario. But we want to now write a covered call, and we want to do it above the $31 price because that's the price we got in. We don't want to do it below $31 because then if we get our shares called away, we would lose money on the on owning the shares. We don't want to do that. So we want to do this at least $31.50 or $32. Let's see what's available. We want to do it now this is a short week. Today's Tuesday. Yesterday was a holiday. So we're coming in with a short week. So the premium's probably a little bit lower than normal. And we want to look at the calls and we want to get at least $30, where are we at? $31.50. This is the one we would sell. Not even the one at the money, but the one just out of the money. And we want to get at least $31 or 31 cents right here. And we can't get that. So what's happened is what I call this is a kind of a wounded soldier. So right now, this particular soldier can't make me any money, and I'm kind of stuck in this situation. I'm stuck in this position. This is what happens with a wheel, by the way. This is the problem with the wheel, is that you get stuck in positions and you can't do anything about it, and the stock keeps falling and falling, and you keep losing money, and you're just stuck there. But with this system, we have a hedge to cover us, and now what we're going to do, now we're going to add a tier 2, a second tier, because our first tier is down. It's a wounded soldier. We can't do anything with it. We're not going to try to sell premium. That's not enough premium. So we're going to create a second position. And that's why everything is sized the way that it is. We have everything sized so we can have two positions. So we're going to sell a put. We're going to start over. We're going to look at this current tier 1 position as if it's just kind of dead, not really doing anything for us. And we're going to start over. Now our put is really going to do well for us because whereas our put hedge is at $26, I believe. Let's see. $26 put. So now we're going to sell. We'll sell this probably this looks like we can get the $27 call. Now see, our put is right here at 26 and we're selling the 27. So our position is super close to the put hedge. So that's good. That's a good thing. So we're going to sell this $27 put, and we're going to look at this tier 2 as its own entity, its own soldier, separate from tier 1. So the first thing I'm going to do is I'm going to sell one put, and this is the put that I'm going to sell here. I'm going to do one. You can see that the mid price it's around 32. We'll start at 33. Okay, so we filled that right away. Maybe could have got a better price for that. And now I need to buy my long call, something around $5. So I'm going to buy the 32. I'm just going to buy one of those, try to get for $5. This will protect my hedge. Now I also have the 100 shares that's going to where I'm long also, but I'm going to treat these like two separate, totally separate positions. I might have to pay $6 for this. Okay. Okay, so now I have my tier 2 on. And tier 2 is at the 27 and the 32. Okay, so I'm going to treat this like its own trade. And what if I get to the level where tier 2 doesn't give me any premium? That's when I exit the position, and hopefully I'm ahead. And if I'm not making money, that if I'm down on the position, then I take a loss. Okay, so let's see if there's any questions. All right. So I've got Charles saying he hears me, and Eduardo. All right. Kevin, good morning. Good morning from Lakeland, Florida. And then we've got Uma. She's got a question here. With earnings edge and the $5,000, 149 monthly payment, what is the percentage we must make for it to be profitable? Well, I don't know. I could run a couple numbers to say you're in it for 6 months. 149 times 6. So you're going to make at least, let's call it $900 over a 6-month period. Or you can just take $149 divided by 5,000. So that's costing you about 3% a month to run the program. So you got a better 3% a month. Maybe that answers the question there. I'm the one who knocks. This is new. Yeah, it is new. So putting on a tier two, I don't think I've done that before in the live stream. So I think we are doing something that we haven't done before, which is good for everyone to see that. All right. Ben, do you have any recommendations on tools to backtest stock data? I know you use OptionNet Explorer for options, but anything for stocks. You can use OptionNet Explorer for stocks also. So if you want to use OptionNet Explorer for that'll work. Oh, 38 watching, 5 likes. Come on, guys. Thanks, Walter. I appreciate that. Yeah, like and subscribe. That always helps the channel, which always helps other people. It gives the ability of other people to see what's going on to help them. Will, in this situation this week, are you not supposed to ask if the position is profitable before entering the second? Oh, yes. Thank you. I missed that. Before I put on that second tier, I ask myself, is the position overall profitable? And if it is, I take it off. But you can see that it was not. So I did ask myself that question, but I forgot to tell everybody else, hey, that's a rule that before I put on a tier two, if my tier one is profitable, I just take it off and start over. And thanks for that, Will. For this strategy, other than the stock going to the moon, what would you like the stock to do? I'd like it to go sideways for a while. Also, sometimes it's good to get assigned. I like to get assigned and then have the stock go up before I sell my covered call. So right now, I would like to see the stock go up. I'm holding this 100 shares where I'm not selling a call against it. So I'd like to see if the FCX rises pretty good, that's going to be beneficial. Oh, Javier says I did a long time ago. So maybe I did do a second tier a long time ago, maybe early on or early in the year. I started trading this January of this year, January 1st or 2nd or whatever the market opened. You've done a tier two before. Oh, yeah, that's what Javier just said. And then you explained how you'd never do a third way back in the beginning. Yeah, correct. I'd never do a third tier. I would just exit the position and take the gain or take the loss. I don't have enough hedge power to handle a third tier. And that's the way the system is designed and the way that it is sized. Edwin, I was able to exit this exact position on Friday at a profit. Oh, interesting. I didn't really look at it. I mean, the only thing I looked at on Friday was my long call, and FCX was down, so I knew that I wasn't going to sell my call for anything, and then I didn't really pay much attention beyond that. But yeah, if I could exit this morning for a profit, I would have done that. Will, thanks. Thank you. And James says, I did it with Macy's. Yeah, I don't doubt that. I probably did. My memory, I don't remember the past very well. That's just my personality. I guess it's kind of good for trading because sometimes you take losses and I just forget about it like that same day. Like I don't even think about it anymore. Either that or I'm getting old, one or the other. Iraqi trader. Okay. Why not just sell the 31.50 and get something better than just sitting there? Yeah, that's the thing. So I could get like $7 for that 31.50 call, but that's the way this system kind of where it kind of makes that extra money is when you own shares and you sell a call that's further out of the money than just 50 cents, maybe a couple dollars out of the money, and then you get your shares called away. And that's kind of where the extra money, where the juice is in this trade. So next week it would be really cool, if the stock just went up to like, what are we at? We're at $31. Let's say it went to $32 or something. That's where the money is made with this system. It's that little bit of outlier move when you're holding shares. Tron, when you have two tiers, do you use the cost basis for selling calls or the assigned value of each tier? I use the assigned value of each tier. I don't get into the cost basis per se. So I try to keep each one separate and use the cost basis of each one. Okay, so interesting situation with the wheel today, the safe wheel, kind of a scenario we haven't had for a long time. I'll just say that. So there's probably some newer people here that are learning that. And James, you really needed to be called away for a couple hundred, as I saw in APA. Your put hedge can lose pretty big. Yeah, yep, true. And if we're able to sell a covered call a couple strikes away, collect some premium on that, and then also get called away, that's where the money kind of, I'm not going to say it rolls in, but that's where you make, that's where you kind of, that's where the alpha is in this trade. That's where the money is made in this trade, is when you get called away or you're owning shares and the stock goes up significantly. And that happens every once in a while, and you only need it to happen every once in a while, right? Hi, Carl. Do you base your 1% premium target on the current share price or the price where you were assigned? The price where I was assigned. So right now I was assigned at 31. So I'm going to try to get something at $31.50 strike price, more than like $31. So let's see, how do you base your 1% premium? So my 1% premium is based on this $31 right here. I hope that answers your question. Not based on the actual, let's say that I'm going to sell the $34 call against this. I'm going to make sure I get $31 for it. I'm going to use this $31. Okay. And these are just little small intricacies that, if you don't like that particular thing, you can kind of tweak it a little bit. These aren't very major. I mean, let's say that I wanted to get $34 instead of $31. It's not that big of a deal. That's just the way I do it. But it's such a small rule that you can kind of tweak those little bit of rules like that if you wanted. I just stick to the rules. It's the way I trade, rule-based trading. Okay, I don't see any more comments. Anyone else have any questions? All right, so I'm going to get ready to end the broadcast. I always like to say, if the P&L is not real, what else are they trying to conceal? See you guys next week.